My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. I'll be one of my friends. I'm just trying to make you some money. My job is not just to entertain, but to educate and teach you, so call me at 1-800-743-CNBC or tweet me at Jim Cramer. Let's see. Is it a V? Is it a U? Maybe it's an L. Or perhaps it's a Z. Or maybe it's a W. Or a Nike-style swoosh. We keep hearing people to argue about the shape of the recovery. But this whole debate misses the point. The defining question of this market is very simple. Will we have a depression? Anything that makes a depression less likely causes stocks to explode higher, and that's what yesterday's rally was really about. Even as we gave up some of those gains today, I'm calling this a consolidation day no matter what. Dow sinking 391 points, S&P losing 1.05%, NASDAQ dipping 0.54%. When you have a big rally like yesterday and it doesn't give up everything just because there's a late afternoon sell-off, it's a consolidation. The issue here is not whether we'll have a rapid V or recovery, a slow U. We bounce low on the bottom, we get the W, and we got L shape. I mean, I don't know. The L, of course, is the house of pain for ages. Lately, the cognoscenti have started talking about the swoosh, no doubt because of the Michael Jordan series, right? And the recovery starts out strong, but then slows down dramatically. All these people fretting about the shape of the recovery are getting ahead of themselves. Forget the recovery. We need to know the shape of the decline, as in, will it be a really bad recession or a full-blown depression? That's what's on the table. Until last week, the depression scenario was very much the only thing on the table, if not, in my mind, the very likely scenario. Even after the Fed and the Treasury Department moved aggressively, and I think terrifically, to cushion the economy, there was still a real possibility that we were headed for breadlines and massive homeless encampments in major cities. I've got a food line right near me in Brooklyn. It stretches for as far as the eye can see. Yes, while you wouldn't know it at all from the averages, there's a real chance of the Great Depression redux. Look, whatever's happening here, it's entirely possible that the economy hasn't yet bottomed. I think we probably have, but it's not going to shock me if we have millions more layoffs. And I could certainly see the stock market going lower from these levels, not a question. However, yesterday the market exploded higher because we got several positives that coalesced all at once. Though you sure didn't get that impression if you're listening to the questions the Senate lobbed at Fed Chief Jay Powell and Treasury Secretary Mnuchin. Our senators don't seem to believe anything's changed for the better. Some of them were downright rude, I thought. I found the whole testimony a ball of confusion, given that the Treasury and the Fed have been instrumental in at least stemming the decline. The source of that confusion? None other than the stock market. The opening bell. See, when you study the Great Depression as I have, the totally gratuitous thing as I have. I mean, I had to go do that, self-aggrandizing. Anyway, as you study the Great Depression, it's almost always framed by the stock market. After the Great Depression of the Great Crash of 1929, stocks just got hammered for years. All sorts of great American companies with incredibly elevated stocks, the RCAs, the Radio Corporation of America, much more than what we have now. That's right, they were much more elevated than now, went under in no time flat, and even the ones that survived saw their share prices get vaporized. During the Depression, the stock market itself was the fabulous metaphor for the broader economy. It told the tale, and it told the truth about what was happening in real America. They were in sync. This time, it's very different. See, this time, the market's much less representative of the U.S. economy. You got all sorts of huge international companies that are built on fabulous secular themes, the cloud, the Internet of Things, 5G, the data center. And these themes have kept working, even in the middle of a COVID-induced economic catastrophe. Many of them actually do better when people are forced to work from home, such as the Cramer COVID-19 index, which will be updated the day after Memorial Day, in case anyone's caring. There was nothing like this in the early years of the Great Depression. I mean, I wish people understood. You got to go look at the time frame of when people were focused on the stock market and on the economy. What they said over and over again was, "Wow, did you see how bad this stock did? Did you see how bad that did?" No, now we just have to focus on employment. Forget the depression. They're not even trading like these stocks are in a recession. It's remarkable. Some of them are out-and-out winners. Facebook, thanks to its newly found embrace of small business. By the way, I think that's a fabulous idea, if you ask me. Microsoft, because of its cloud services division. Apple, because of its service revenue stream. Netflix, because people are desperate for home entertainment. Amazon, because they deliver just about everything right to your door. No mask. Let's drill down on Amazon for a minute, because it's emblematic of the exact opposite thing of the great stock of the Great Depression people always talked about, the Radio Corporation of America. It's exact opposite. See, in the Depression, there were no Amazons. Instead, we had legions of bankrupt communications and retailing companies, particularly retailers. They didn't have enough shoppers because they were simply, well, there wasn't enough money. But this time, even with 30 million people losing their jobs, we had a safety net, including programs that were put in place after the Great Depression and the government's multi-trillion-dollar rescue package. Without the Paycheck Protection Program and the $1,200 checks per person, and especially the massively expanded unemployment benefits, we would be in much worse shape. They didn't have any of that in the 1930s. If this safety net that generated enough demand to boost companies like an Amazon or Walmart, which reported today, it was, by the way, a stellar quarter. It was number powered by 70% growth in its e-commerce and division, and it's giving you another chance to buy it because it's sold off at the end of the day. So the relative strength of the stock market has obscured the depths of this economic meltdown. Even as the 10th of the country lost their jobs, stocks simply aren't behaving like we're headed for a depression. Still, that was very much the case, at least until very recent. See, in the last 7 days, we've gotten some remarkable revelations. First, as the states started reopening for business, we realized that there was indeed a lot of pent-up demand, despite the high rates of joblessness. We heard today from Home Depot and Walmart that business got stronger in May, making it clear that April was the bottom, even as things looked pretty darn bottomless 19 days ago. Second, the price of oil is bottom. Well, I think oil prices are a terrible barometer of the broader economy. Wall Street disagrees with me. And when crude plummeted to negative $37 a barrel, well, that terrified people. Seeing crude bounce back to 32 has given many of these hedge funds a lot more confidence. More importantly, at these levels, most of the oil producers will be able to pay their bills, which is huge for the banks that lent them money. You get big credit card defaults coupled with some oil defaults, and the banks will be reeling, canceling dividends, fighting for the lives. But oil's come back with a vengeance, and the early credit card delinquencies are surprisingly low, which means that, again, unlike the Great Depression, the banking system remains intact, even as I continue to hate the stocks in there. Then when you look over all the debt that's been issued in the last few weeks, a huge percentage of that debt never would have been able to be issued under normal circumstances. No one would buy it anywhere near where the levels it came out, and the companies would have probably gone bust. Hey, come on, Carnival was struggling to survive, desperately trying to find financing, stock down to 8, offering death-rattle terms. Nobody would lend them any money, except the Federal Reserve, of course, then promised to buy the bonds of struggling companies. Suddenly, Carnival's bond offering, you couldn't get enough of it. At the same time, every single airline, every one, would have gone under if it weren't for the Treasury Department. They had no business, and they had no business being in business. Without the government, they would have folded with truly catastrophic layoffs that have then extended to Boeing and the 2 million people who work for it in Boeing's supply chain companies. The Treasury Secretary saved these companies. I mean, people just say, he saved them. Are you kidding me? That's how you really get into a depression. Even after all these interventions, we still had a lot to worry about. There was one more missing piece of the puzzle. We need to have some hope for a vaccine. Not the vaccine, but some hope for vaccine. When you look to the major pharmaceutical companies, they all say next year. That's a long time. But then yesterday, Moderna releases some very preliminary very preliminary data that suggests that they might have something by early next year or even late this year. That gives us hope, although the hope was partially repealed today when people started poking holes in Moderna's press release. Look, I think Moderna was very careful about what they told us yesterday, which was not a lot. But some people blew this extremely preliminary data point out of proportion, and others today, noting that the company sold stock at the opening, seemed to think that the press release and the subsequent stock sales were both ill-advised. Look, I'm not saying this market's done going down. There's always the possibility we get more sell-offs like we did at the end of the day, and you'll hear more about that later. We go off the charts with the Fibonacci Queen. But the bottom line, even if Moderna's vaccine news was blown out of proportion by people who need some remedial statistics lessons, and I know that class was hard, so I understand, I'll excuse you. The fact is that we've probably taken a depression off the table. And that's more important than which letter of the alphabet the recovery happens to resemble. Doesn't mean there's not more downside, but does mean we likely won't be revisiting the March lows because of all the not as bad as feared news that permeates the market. How about Darren in Florida? Darren.
Booyah, Jim.
Booyah, Darren.
Want to give a quick shout out to my pops, my brothers, AJ and Billy, and my buddies Ricky and Ryan. But, Jim, I want to talk to you about CRM. Salesforce, amazing company, great track record. I currently own it, and I'm walking a little taller on that spike up today. I'm still extremely bullish on it in the short term, though. Fair value on the stock in the high 190s to low 200s. I want to double my position leading into
No,
earnings coming on the
come
28th.
on. What would Ricky think? That was one of his friends. No, I don't want you to double yours. You got a really nice run here. I mean, if anything, look, I don't offend Mark Benioff, cover your ears. I mean, I would rather sell a little than double here. I mean, you got a really great gain, and my Charitable Trust owns it. We look at it every day and say we thank our lucky stars it's this high, but we would not double down here. And go, just tell Ricky to be cool. All right, let's go to Michael in California, please. Michael.
Great big booyah to you, Mr. Cramer.
Oh, John, nice booyah back to you.
Long-time listener.
What's up?
Thank you for taking my call. I'm a huge fan of yours. Got my DVR filled with Cramer Mad Money.
There you go.
I'm calling on Clovis Oncology, ticker CLVS.
I have to tell you, I have always liked Clovis. I think it's a great spec, but you got to understand, I look like my sister-in-law's in Boulder, and I always say, let's go buy Clovis. It is a spec, though. So if you put more than a tenth of your money in this, then, Michael, you shouldn't be DVDing me, or what are you DVRing me, or whatever you're doing, because it's too speculative, and it doesn't make any money, but I do like the idea. Let's go to Ian in Michigan. Ian.
Hi, Jim. Here's Ian Weinberg. I purchased Trade Desk in the middle of April for $32 a share. Is it time to take some profit, buy more shares, or hold on?
What's the stock there, Ian? Oh, Trade Desk. Look, longer term, I like Trade Desk very much, Ian. And I think I'm going to give you that you have horse sense. Why? Because Trade Desk is the alternative to Google. It's the way to be able to advertise, get your customers to be able to be wherever they should be, all over the web, the internet, whatever. And I think that's a really good call. But it is a hard stock for Ian to own. I would have preferred for Ian to say that he liked, say, Netflix. That would have been easier. All right, here we go. A depression? Well, the last couple of days seems like it might be off the table. And that's one of the most important factors of this market. It's one of the reasons why we rallied so hard until Stat put out that Moderna story, which said that what same thing Moderna said, which is that we don't necessarily have anything other than some encouraging data. They're not going to put out a release saying we solved COVID. Well, Mad Money tonight. You've heard it many times before. Small business is the backbone of the economy. So how about some creative under quarantine things that could leave a lasting change? Then I'm going off the charts with a woman who nailed the crash back in February and told us so. What does she think about the current setup? I'm tackling the technicals. And with corporate offices closed due to COVID-19, more people are accessing corporate systems from home. So I'm eyeing Ping Identity. Find out how it's allowing access while keeping your data secure. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.